Hello everyone, how are you? I hope you all are good and well. So in this video, we will talk about operating expenses, its definition and examples. Let's talk about on that. What is an operating expenses? Let's talk about. An operating expenses is an expense that a business incurred through its normal business operation, often abbreviated as OPEX. Operating expenses include rent, equipment, inventory cost, marketing, payroll, insurance, step cost, and fund associated for research and development. Now let's talk about the key takeaways. There is a five key takeaways. The first one is an operating expenses is an expense that a business incur through its normal business operation. Operating expense include rent, equipment, inventory cost, marketing, payroll, insurance, staff cost, and funds associated for research and development. Internal revenue service also businesses to detect operating expenses. If the business operator operates the earned profit, by contrast, a non-operating expenses is an expense insured by a business that is unrelated to the business's core operations. A capital expense is a different type of expense that is related to acquiring, maintaining, or upgrading an asset. Let's talk about the operational activities. Operational expenses are the cost that a company incur while performing its normal operational activities. Operational activities are those tasks that must be undertaken from day to day to operate the businesses and government generate revenue. Operating expenses are different from expense related to, for example, investing in project and borrowing. Operating expenses are different according to what a company does. In fact, some activities might be considered operational in one industry, but not so in another. It's important to understand the distant destination due to the tax deductibility for operating expenses. Some common type of operating expenses including rent, salary and wages, accounting and legal fees, bank charges, sale and marketing fees, office supplies, repairs, utilities expenses, cost for goods sold. Let's talk about the managing operating expenses. One of the responsible that the management must contend with is determining how to reduce operating expenses without significantly affecting a firm's ability to compete with its competitors. Operating expenses are necessary and unavoidable for most businesses. Some firms successfully reduce operating expenses to gain a competitive advantage and increase earning. However, reducing operating expenses can also compromise the integrity and quality of operation. Finding the right balance can be difficult but can yield significant rewards. An income statement tracks the income and expenses of a company over a certain period to provide an image of its portfolio. Income statement typically categorize expenses into six groups: cost of goods sold, selling, general, and administrative cost. depreciation and amortization, other operating expenses, interest expenses, and income taxes. So this is our video for today. I hope you get some information from this video. See you in the next one.